Well, we're seeing a rally in Italian bonds, at least for now. The question we were posing to Alessandro was whether the coalition will last. Will the rally in Italian bonds last beyond today or this week?
I think it could continue for a little bit longer. You know, ultimately, as we said before, when you have so many yields out there, negative yielding, Italy is a great buy. I mean, although the risk profile is pretty negative. Now, in terms of whether it lasts, you know, there's such different ideologies for the two parties that you have to question, will this continue for more than a year? So I wonder if actually there's more political discord to come in the future, which then at some point, of course, will again create a buying opportunity for Italian bonds.
Seema, there's Jeffrey's note out this morning. One of the lines that caught my eye this morning was that Donald Trump said three things. One, the Chinese are desperate for a deal. Two, we're very close to a European deal. Now, that is anybody's guess. But one industry group that's been battered is the auto sector, down 17% in the year. Jeffries say if it is the art of the deal, you'll get something through. And such a battered industry below book value might merit attention. Agree, disagree? How do you personify your European exposure?
That's a really interesting point with the autos. Ultimately, if there were to be auto tariffs at this stage, I think that would really be absolutely awful for the European economy. They are teetering, they are on the brink of recession. They can really afford very little at this stage. Even a hard Brexit, I think, would be very dangerous for Europe. So certainly, if there is a trade deal that lifts off one of the major clouds which is lying over Europe, the automakers, on the other hand, you know, they are under structural decline, so they need a little bit more than just that good news on the trade front. But as you said, they are so undervalued that there could be a buying opportunity at some stage.
What is going to move the euro significantly at this point? Because compared to other currencies, it's really been fairly range-bound. Of course, you've got push and pull from different factors. But are you generally positive on the euro at the moment?
No, I think we're very negative on the euro, and there's a number of different areas on this. One thing is, I think, which is key, is actually the ECB is likely to be more aggressive than the Fed. Despite whatever pressure there comes from President Trump, you know, the ECB is in a more difficult position than the Fed. We are expecting a very comprehensive easing package for September. On top of that, you have very weak growth coming through Germany on the edge. So I think from our perspective, the euro is on a further downward trend from here.
Seema, I know that the FTSE 100 is more a global play rather than the UK, but it makes for a good chart, so what the heck. It's the worst month for the FTSE since 2015. That is a trade play, but talk that back through to me in terms of, are you at a break point of where you would begin to reconsider taking some more UK exposure through sterling, through the 250, or how do you look at this?
Well, what's interesting about that chart is probably that investors have been waiting for that big drop down for the FTSE since the referendum. So this has been long coming, and I think now that we're seeing this, it really tells us that people are starting to lose confidence in where these Brexit negotiations are going. For me, I think the chance of a hard deal are too high at this stage for me to believe that this is a buying opportunity. I expect sterling to go through to the 118 threshold in the run-up to October the 31st. And if a hard Brexit does come through, then I would expect it to fall very firmly through that threshold as well.